Bitcoin and other cryptocurrencies are rapidly gaining popularity, but some investors may still be unsure whether crypto is a solid investment or a risk they'd prefer avoid. Although opinions on cryptocurrencies differ, there is no doubting that crypto assets are in high demand from both individual and institutional investors, and that their movements are becoming increasingly closely associated with those of mainstream indexes. Bitcoin accounts for around 43% of the overall crypto market, making it the most well known and widely held cryptocurrency. But the crypto universe is huge. There are over 17,900 cryptocurrencies to trade, with a total market capitalization of $1.9 trillion. According to the World Economic Forum, the crypto sector's market cap increased by 187.5% in 2021 alone. The cryptocurrency industry includes blockchain assets such as Ethereum, Polygon, and Cardano, which provide networks for applications to be built on their platforms, in addition to coins that are seen as digital money. Although Bitcoin's price has fallen by around 11% this year, some alternative cryptocurrencies have outperformed. The prices of smart contract altcoins Solana and Terra, for example, have increased by around 660% and 1,600% respectively this year. Cryptocurrencies are becoming indispensable as new crypto subsectors emerge, such as smart contracts, decentralized financial applications, and non fungible tokens. More investors will be interested in learning about the dynamics of the crypto world and investing in it as more firms accept cryptocurrency and the blockchain technology that facilitate their operations. Cryptocurrency is a type of digital currency that can be used as a peer-to-peer medium of trade, a store of value, or an investment. It is secured by encryption or secure communications. Bitcoin, the first blockchain cryptocurrency, is a type of digital currency created under the pseudonym Satoshi Nakamoto by an anonymous founder. Cryptocurrencies are not managed by a bank or a government body. Instead, cryptocurrency token transactions are often recorded on a public blockchain, which is a database of digital information. Blockchain technology is used to maintain an online ledger of all transactions and provides a secure data structure for the ledger, unlike fiat money or government issued currency, which is regulated by central banks. Cryptocurrencies do not require banks to authenticate transactions and are not regulated by them. Every one of the tens of thousands of cryptocurrencies has its own set of security and value propositions. Despite the fact that Bitcoin is a relatively young phenomenon, it has the potential to transform the financial system and our understanding of money. Cryptocurrency is a new asset class at the foundation of the crypto economy, says Max Brandsburg, Vice President of Product at Coinbase Global Inc., one of the main crypto exchanges. Retail investors can now access a world of global money as opposed to what they can access through the US market, according to James Putra, Senior Director of Product Strategy at TradeStation Crypto. Beginner crypto investors should think about transaction costs, the types of cryptocurrencies accessible on a platform, educational tools, and other characteristics that correspond with their aims and interests. There are a lot of